Sweet. So welcome. Right, we're going to jump straight into mindset phases and how we learn something new. This is a brand new skill for most of us. So let's jump right into it. So this, can everyone see that still? I can't see if everyone can see that. Can you see this 4 steps to mastering a new skill yet? Okay, cool. So first and foremost, we talk about like who you listen to. Luckily, we've got a whole group that's pulling you along, like in a mentorship fashion. But also, we talk about personal development, about getting your mindset right, about making sure that we are training ourselves to be less emotive when we trade, because it's where we know a lot of these things can go wrong. So who do we listen to? We've talked about Bob Proctor, who's a mastermind mindset mentor in the academy. We've talked about let me let Fiona in. We talked about Mark Douglas, Trading in the Zone. That is a fantastic book, trading related psychology. Wow, like definitely jot that one down if you haven't read that one already. The reason I think this is really important is there's, the people that you should listen to and the people that I listen to are the people that have got something that I want. So I listen to Manny Q, I listen to Luke Longmire, and I listen to these mindset gurus that have clarity in their thoughts, in their trading or whatever. So I'm always trying to level up. And why that's really important is trading my own money and making as many mistakes as I was making profits, took a certain level of myself. Going on to a demo of 100 grand and doing that successfully, that took more effort in terms of do things differently. Passing the test then was that was a bit of a jump, to be honest. So I'm under no illusion that the next step of being funded and taking withdrawals every month and take another better version of me. So constantly developing your mind. We'll come to the skill, but your mind. Secondly, we talked about this last week for those of you that were here. Oh, big shout out to Chloe. Chloe's new. Chloe joined us I think late yesterday, early today. So welcome to your first call. We talk about being coachable, and simply what being coachable is your willingness to learn and your willingness to change. So out of 10, I always think about this. How willing am I to learn divergence? How willing am I to really learn about support and resistance and candlestick patterns? All that stuff you go through in the boot camp. Like, how do I just want the profit, or do I want to know what I'm doing? What's your willingness to learn? It can change all the time. So out of 10. And your willingness to change is more about, developing yourself, like I've said. What you're willing to sacrifice. We've got lockdown easing. We could very easily get distracted when we're on this kind of mission. And I'm not saying, like I said last week, I want you all to stay in and be like hermits, but like just keep that in your mind. Like, Chris is telling me to do this. Am I doing it? Do I want to do it? And unless you're a 10 out of 10 on both, we're going to get there a lot slower. Okay? Constantly think about, well, what's my score? Am I willing to like settle myself down and just commit? All the time, just be thinking about that. Okay, now this one sort of blew my mind a little bit. But it kind of, what everyone's been saying to me since I joined the academy is it's 90% mindset, 10% skill. And when I heard this, the training balance scale, it kind of resonated again. So like every goal you've got, when I said like, right guys, drop your affirmations, drop what you're grateful for, all that sort of stuff, all your goals and all your dreams and everything you think about, it's first in your mind, isn't it? It's a picture that you think, oh, I want this car, or I want to make 10 grand a month, or whatever your goals are. You haven't actually got them yet, so you think about them first. So when you have emotion about trying to hit a target, you know, that's where everything begins. And obviously, when we're trading and things maybe aren't going for us, where it keeps us in the right place. That's why personal development is so important. Why I bang on about it every call, and I will never apologize for it. It changed everything for me. So just keep thinking about all these things that I'm talking about, all for the greater good, all for a purpose. And that 10% is like, well, how do you actually achieve your goals? I've got these, you know, I know what it'd feel like when I get my blackout Tesla. Yeah, I know what that's going to feel like. How am I going to actually do it now? Okay, well, that's where the strategy comes in. That's where the learning the skill comes in. That's where you know, you're training a certain way to be in the markets. But most of it comes from how you think whilst you're doing all of that. The how becomes repetitive. Wicked. Any questions so far? We all good? I think we're all good. If you've got any questions, drop it in the chat box, and I'll get to it at the end. We haven't got too much more of this. Ryan's coming in now. I'm going to jump on the chart. So there's loads of like ways to relate to this, but when you're learning something new, you go through these 4 stages. So the first is, we'll talk about trading, where you're unconsciously incompetent. So that means you don't know what you don't know. So you don't know everything. You don't know what a rising wedge is. You don't know what a bull flag is. You know, all these things, terminology, pips, stop loss, risk reward, you know, all of that is new to you. You know, before I started doing trading, I didn't really know you could do it. I thought you had to be a millionaire or whatever, or do it for a company. So unconscious incompetence, you don't know what you don't know. Then you join the academy and you start going through the videos, and then you realize that you know that you don't know. There's lots of information out there that you realize actually there's a lot to this, and I don't know what I'm doing yet. And that's perfectly normal. That's what people kind of get in boot camp. It's great. Then you sort of evolve after that into conscious competence. So now you know that you know. So you know what support and resistance is. You know what a trend is. You know what a market reversal pattern looks like. You know what the scanner is. You know what the indicators mean. Yeah, so you're developing your skills over time. Now, the sweet spot, like where everyone wants to get to, is unconscious competence. You know exactly what you're doing, and it happens automatically. So we've talked about this individually, probably with most of you, but think about driving a car, and you've driven to and from work. And have you ever got to work and you think, I don't remember that journey? I literally was on autopilot. Because you've done it so many times, you don't even need to think about it. So unconscious competence, you do it like tying your laces. I could be having a full conversation with you whilst tying my laces. Like I can do it without even looking. You know, it's all those like everyday habits we've picked up. We've just done them so often. So when we're thinking about trading and getting to level 4, which is where the sort of glory is, you know, where it feels easy, like it feels like, you know, you can see a trend line, you see support and resistance, you can see if it's a harmonic scanner pattern that you want to trade because you've just seen it so much. Now the big thing is that how do you get from 3 to 4? What's the difference between 3 and 4? There's 2 ways, but specifically the most to make you like a self-sufficient trader, the way to get to 4 is to just do it over and over and over again. I send you all sent in the group before the trading checklist. Right, I don't just do that for I don't know, something to send you. Like that is exactly how I trade. So I fill that checklist in every single time before I trade, because why? One, I'm human, so I can definitely make mistakes. So if I'm relying on you know, not using a checklist or, you know, just winging it, you know, I'm potentially at risk of missing something. So having it robotic, like, right, I tick this box, move on, tick, tick, and you only trade when you've got all the ticks. Sounds really, really simple, but that's it. That is it. So by doing that over and over and over again, I know I can do that without using my checklist now, but I still use my checklist because it is now my habit. You see what I mean? So the other thing you can do to get to level 4 is to have a mentor that's doing it with you. But we don't have that benefit of us always, every time we trade, having like Manny over your shoulder or me over your shoulder. So that's more on you. So the reason I wanted to bring this to your attention is I was stuck in number 3 for ages. I knew what I was doing, but I kept making mistakes, and I kept, you know, growing, then losing, then growing the account and losing, and then, you know, I failed 2 funded account tests before I passed because I was in number 3. So I knew what I was doing, but it wasn't automatic. And that meant that I deviated from my plan. Do you remember we did that session and I said my strategy was great, but I've realized that when I didn't follow my strategy, I lost 10% of the account. So that's why I passed it quickly the 3rd time around, is I didn't deviate, and I never will. But like I said all along, I don't want you to make the same mistakes I have. So I'm sharing this with you to fast track you. All right, it's all in the title, it's all in the name. All right, perfect, perfect. Right, so we're going to leave that there. I hope that makes sense. Oh, you want to know where I'm getting all this from? I listened to Luke Longmire. He's literally made me the trader I am. I use Manny's strategy, but Luke's psychology, and we've been messaging on Instagram for ages. He's like really humble, like really nice bloke. And I just said, look, I want to level up my trading game, and he said, right, listen to this chap, Kevin Trudeau. Your wish is your command. He actually sent me the Dropbox stuff, which I've put in the group before, but all of the audios on YouTube. All right. So if you want to like really dig deep into the psychology of not just mastering trading, but mastering yourself, wow, amazing. It's really, really good. It's really, really good. So that's that done. Any questions on that before I move to the any questions? Okay, cool. Let me just get this set up. And how people get along this week? Have people been placing trades? I've seen some in the funded account group. Anyone catch GU today? Anyone get on that? Ready. Right, I've got the scanner now. Yeah, 50 pips on GU. Let's go, James. Good man. Good man. Right, so am I sharing still? Can you see the scanner? Everyone on the scanner? Yeah, cool. Right, so we all know the scanner. Chloe, you saw it probably for the first time yesterday. We're going to do some one-to-ones to help you level up. But we all know this is where everything starts. Yeah, so we go to the scanner. Now, honestly, I only use hot forex on the hour. Hot forex on the hour. I'll tell you exactly why. If you're on the 4-hour or daily, you're a swing trader. That means you'll be holding the trades for potentially weeks and months. All right. With the funded account, you can't hold a trade over the weekend. So that isn't good for us. And it limits your opportunities, obviously. Now, a 15-minute chart, when you're a scalper, so a scalper is like you're in and out like a flash. What that also means is that you have to pay a lot of attention whilst you're trading. So if you're trying to do it around a job or you've got limited time, again, it's not ideal. I've tried, tested it, journaled, all these things. So the sweet spot is the hour chart with a 15-minute entry. Okay, so these things that I've said to you all along has come from months, literally months of recording every trade. Right, the one drawback to the scanner is you can't back test it. I can't go back through AUD USD and see how many times this scan was placed and how many times it went to TP3. Like it comes and goes as soon as the pattern's done. So you can't do any back testing. You just have to test it live. That's what took me months. All right. Giving you like the reasons why I'm so strict. Hot Forex hour only. There's nothing there, then I do not trade. Simple. If I'm on the scanner and there's nothing that takes my fancy, then I will, if I'm on at London opening, then I'll come back at New York opening. Yeah. And in that time between London and New York, I'll do some personal development. I'll go shopping. I'll do whatever I need to do. Yeah, I have USD CAD on your screen. Maybe refresh so that we might try that. It is quite new. It's only been on. Downtrend buying. See that? See the market's pulling down and the scanner's giving us a buy. Go straight to stop loss. Boom. That's why we don't trade against the trend. Right, I'm going to try and find a corker. GU came off here, didn't it? EJ is not exactly, it was good, but it wasn't exactly what. Okay, this one's good. When did that come on? Last week. Okay, this is fairly new as well. Euro ord, I love Euro ord. Okay, but again, you can see that that's a downtrend. Buying, like we don't buy in a downtrend. You might argue that the A point's broken these highs, but that's like the mid. That's not a swing point. Swing point's up here. In my opinion. Yeah. What I'm going to do is I'm going to go to GU. One I was looking at earlier. And I'll put the pattern on just to make it easier. So this came on and then went off, but it was something like this. Oh well. I'm going to start that again. What am I doing? Right, it was something like that. Okay, let's just imagine that's the scanner. So what do we do first of all? We want to know, are we trading with the trend? Are we trading with the trend? So we can zoom out. Yeah. So my bias was a little bit tricky actually, but from here you can see it's in quite a clear uptrend. Now until you get a bit more advanced, you could argue that this was like a sort of a counter downtrend. The reason I was happy with it is it broke the downtrend, retested up, coming down to a previous area of support. All right, do you see that? Like, to be absolutely honest, I would be quite cautious on this one. It wouldn't be like an absolute, like, nailed on, like I want to trade it. But I was happy enough because I had the overall uptrend and then the bullish break of this downtrend here, plus the support and resistance with good fib levels, all right, which we'll go into in more detail. I'm going to give the overview today. On the hour, my phone is, hold on a minute, it's just buzzing constantly. So on your tracker, yeah, I'm just going to be going through this separate page. What pair? Obviously, you fill that in. What the pattern is? I think it was a Gartley. Can't remember now. Is it with the trend? Then I would say overall uptrend, and then a bullish break of a downtrend. Structure. This means it is the entry previous level of support and resistance. Certainly here, like there's a lot of bounces off it here, and then it's come back to that level. Is there divergence? So if you haven't done divergence training yet, divergence is simply when X and D, so you see on the AO here and here, if I was to draw a trend line between those two, so that peak, you can see that trend line is going up, yeah? And X to D, the trend line is going up. So there's no divergence. What I would then look for is there divergence between B and D. Again, I'll draw a trend line in the AO from the baseline because it's kind of flat there. Then to D, again, that's coming down, and B to D, price is coming down. So no divergence there. The only other place I would then look to spot divergence is in this from like C to D. So you see where it peaks and then drops. So these are making lower lows. So I'll just be seeing is, and it's not. So if that low here and this low here, you kind of see that it's level. I'll do a trend line again. It's not great. That's what's known as hidden divergence between here and here, which is a good indication that price is about to reverse. So we've got a scanner pattern, we've got fib levels, and we have divergence, hidden divergence. Now on the hour, we just want to make sure the first step of our entry confirmation is that price, this candle here, hits the DC channel. And Chloe, if a lot of this is like double Dutch, don't worry. It'll make sense one day. DC channel is hit at entry, tick. Yeah, that's our first confirmation. Right, let's get this interactive. What happens? What do we do now? DC channel hits entry. What are we doing? Someone in the chat. What are we doing now? 15-minute. I've just given it away. Great. All right. I've been on Zooms like all day today. Right. So we drop down to the 15-minute. Why do we drop down to the 15-minute? Yeah. Okay, so kind of, Ryan. So we drop down to the 15-minute. We're getting the scalper entry, which is the best risk rewards. We're getting in early. If we're waiting for the hour to trigger, you know, you might be midway through your morning at work, or, you know, I'll wait longer. So we're waiting for the 15 minutes because we're getting in early and we'll get best risk reward. So the first entry we're looking for, we're dropping down to the 15-minute. That is our checklist. Drop down to the 15-minute. Yes. Literally does it for you. Now we're looking for the confirmation candle. Confirmation candle. Right, who thinks it's this one? Let me do a vertical line. Is it this candle? Okay, we've got some conflict in the chat. Okay. So technically, Eddie, I can see why you would say yes, because it's a flat bottom with the 4 crossing through the body, which is what we look for. But remember, we need to have blue above, blue above. The only thing missing is the DMI. Yes, everything apart from that very last tick wasn't present. What we do is we wait for the next one. Is it that one? Is it the very next candle? Blue, flat bottom, 4 crossing, but the DMI is still in there. See that? But on this candle, the blue is now above the red and the black is pointing towards the 40. So it's getting ready. Yeah, so if I'm live looking at this, then I know I've got 15 minutes before the next candle close. So I can go and have a quick shower. I don't know, whatever you need to do, go make lunch, do a bit of work, whatever you need to do. 15 minutes till the next candle. Right, next one. Blue bar, blue above red. Do we have the DMI? Oh, oh, oh. Who are my rebels? Who are my rebels? Who would have got in? Who would have got, look at that. What was it at? It was at 36, needs to be over the 40. This is our candle. This one. So what you might be thinking is, okay, well, this one, the 4 isn't cutting through the body. Yeah, probably. So the 4 is actually sort of pushing it up now, if you think about it like carrying it. But because we've had 2 consecutive or 3 consecutive body cuts, that makes sense, we're just waiting for the DMI. I would be waiting for that one. I want to see the DMI. Why is the DMI so important? Because it shows who is in control of the market and how in control. So we had the buyers in control for a while, but not enough. Boom. As soon as it breaks, we're in. Very quick one. Does anyone know? See this bit here where it just goes a bit whiskey, like, it's all going crazy. No one's doing nothing. Do you know what that signifies? Anyone know what that signifies? Give it a couple of seconds. Oh, Luke. James Perkins. All right, guys, you're killing it. Yeah, that signifies consolidation, market reversal. That is like shock in the market. Sellers are out, buyers are coming in. There's a wrestle for control. So we want to see that before it triggers. If it just goes flip from red to blue and the black stays above, which kind of happens sometimes, I don't think it happened here. It happens sometimes, and normally it's not ready. That's like an advanced tip. If it just goes black stays above, these cross the blue and red, we're not ready. Wait for it to consolidate. All new trends start from consolidation. So that is a really good, really good thing to look for. Right, so you saw me draw this box. This is what we call the entry candle zone. Yeah, this zone is where we're saying it's safe to enter the market on that first entry. So it's the bottom of the body to the top of the wick in a box that we pull across. So when that candle closes with everything blue, 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 it doesn't matter where the stotch is. Don't get like too caught up in it. Oh, well, it's up here. Don't worry about that. Like, it's where just what's above, is it blue or red? Bang, we enter. We're buying, so we're looking for a long position. And let's go worst case scenario. So we enter at the top of the zone. So when the candle closes, the price is here. Normally pulls back to 50%. Another little tip, but I'll do that another day. And if we're being super cautious, we're going to put our stop loss below the entry, so below the D point. Right, until you journal more and more trades, I would. My green lines are the take profit based on fibs. So this kind of works off. And we know we aim on the first entry, we aim for TP3. Yeah, we're going to go and create a new high. Yeah. Alrighty. Entry one, what are we? 1 to 3 risk reward? 1 to 3.66. So you risk 1% to make 3.66. Okay. Right. Let's say you're still on the chart, or you've missed the first entry, or you're looking to get in all three, which is like ideal. Now we're looking for our second entry. The reason why I love this strategy is you get 3 goes. The one that's going to lose, if any of them are going to lose, the most probable one is the first one. So by the time the second and third trigger, we're good. All you have to work on is where you put your stop loss, which we can. It's pretty much trial and error. It's trial and error. But you can be super cautious and put it below. I'll show you what being cautious. Second entry, blue and the 4 and the 50 cross. So let me just move this out of the way. Right, so you can see here, blue is the 4, the black is the 20. I think I said 50. The 20 is the black, blue is the 4. When that crosses, the candle closes, boom. So let's say it was on here. We're entering the market on the close of this candle. Now, do you remember I've said to you guys that like you don't have to look down, blue, blue, blue. You can, but most of the time it's all there. You're in more momentum. Do you remember what I said about the AO? So the one thing I would look for is if the AO's flipped to the upside, like it has there. The AO bar is now above the middle line. That signifies that it's starting an uptrend. When we entered on the first one, we were entering on the pullback. Now that's the uptrend beginning. Boom, cross, we're in. We're aiming for TP3. Stop loss below the entry candle zone. And you've got another 1 to 3. Right? So if both of these go on to hit TP3, we're nearly 7% up. We're over 7% up, risking 2%. Yeah? Now we get the third entry, which is where we're waiting for the 4 to cross the red, the 50, and the DC off. So everyone knows the 4 and the 50, yeah? We're comfortable with that. 4 and 50 cross, same principle we're entering after the candle closure. Now this is where, if anywhere, you're going to get a little bit of drawdown. Because what normally happens, I guess it's like market patterns and stuff, but the market will tend to always pull back to the 20 and the 50 and then use it as a moving support and resistance. So when you see it cross and break through, that's an amazing sign that it's switching from a downtrend to an uptrend. Okay. So it crosses, we get in, and now we're aiming for the 127 extension, which I haven't got on. Great. Bear with. to the 127. So if our analysis is right, then it should go and make a new high, which will be breaking this swing high up here. That's a 1 to 7. Oh, I'm done. Now, I think I've said on some calls that I looked at the candle within 2 candles below. I'll put my stop loss there. But in this example where I'm kind of, where I said at the start, like it's breaking the, is it in an uptrend or a downtrend? But it's broken this counter trend here, now gone bullish. But for that reason alone, I'd be looking at this as a bigger stop loss. If it was like straight up, pull back to a 618 going long, then I'd keep the stop loss tight for a better risk reward. But you'll come to learn that over time. Like you just got to go through the pain. But I'm trying to help you. So if it's anywhere where the trend is a little bit hard to identify, like you could argue both ways on that one, then just be more cautious with your stop loss. So what I normally do is I'll look, well, what my other stop losses? Well, this one was 38, this one was 33. So I'd kind of be at least 30, 33, just to match these up. So your risk reward then goes to 1 to 4. And the idea is that you don't go anywhere near it. Yeah. Now you can get into drawdown, like I say, and as you can see, it's pulled back into the 50. So it's bounced off the 50, the red line, and it wicked the 20. That's all good. That happens. Another really good indication you're in the right place is when the 20 and the 50 cross here. So we've got consolidation. Look what happens to the DMI. A wrestle again, wrestle in. Buyers come back into control, wrestling, consolidation. Buyers trying to take control. Okay, that happens. So what I do, once I've got all 3 entries, mark them on my sheet. So you do your lot size, obviously, before you enter. Entry 1, yes, what's the risk reward? Entry 2, yes, what's the risk reward? And so on. And then everything from there, I'm checking it on the hour. All right, so what I'm checking on the hour, because remember, we're getting in early on the 15-minute. If I want to kind of babysit it, we talked about babysitting your trade. When you've got a funded account, or when you're trying to pass a test, you might have times where you want to watch it. This is what I watch if I'm watching it. I'm waiting for it to trigger on the hour. When I see it starting to trigger and we're getting these flat bottom, bullish pushes one after another, I'm absolutely happy as Larry. We've now just had on the hour the 4 and 20 cross. I would never enter on that because your stop loss is going to be gigantic. Where are you going to put your stop loss? It's going to be 60 odd pips. Then if you're going for TP3, which is here, it's not even a 1 to 2. That's why we don't enter on the hour. We just use the hour just to confirm that we're still in the right trade, buying, because it's still yet to trigger. Does that make sense? That's how we can manage it. And the only time I'd pull it early, so like close the trade manually, is if you're happy with the profit, which we talked about. So we've got this Fastrack to Freedom, we've got the demo test group, and then we've got the funded trader group. So in the demo test, we talk a bit more about trade management, because that's where we're really refining the skills and practicing. You can't lose if you close a trade in profit, right? What we said in that group is, if you're feeling like you want to close a trade, then by all means close the trade, but keep an eye on what the trade does. Like journal, I closed the trade because I wasn't sure if it was going to continue, and it went to hit TP3. Or I closed the trade, I wasn't sure if it was going to continue, and it reversed. Why did it reverse? But if we're just thinking about the money, we're going to be thinking emotionally, which then makes us more liable to make mistakes trading. So it's got to be like a bit of a science. So I know the percentage of that going off to hit TP3 is pretty high. Now, if it was a bang on, you know, like I was talking about, uptrend, pull back to the 618 deeper, and it's a strong buy at resistance with divergence, you know, 70-80% is going to hit TP3. That's probably like 60% because of the structure before the trigger. Like I say, on the hour, this has just triggered the second entry. You'll probably see a little pullback down to the 20, and then it will go and break the 50, and then that's it. We're off. 2 and beyond. Ready? So just to reiterate, trend is your friend. So if you are unsure if it's bullish or bearish, then don't enter, but just draw it up as if you would enter and see what happens. Document it, journal it. Okay. So if you want to trade a funded account, you're a pro. You are a pro trader. Whether you're going to do it part-time or full-time, you have the ability to make money from the biggest financial market in the world. You are a pro trader. So we kind of got to document these things seriously to make sure that, you know, we're thinking subjectively rather than emotively. Again, comes back to the learning phases, comes back to personal development, all that sort of stuff. It's all linked. It's all linked. These hours go quick. 51 minutes. Okay. I hope that makes sense. Does anyone have any questions? Anyone want to jump on? Ask me any questions. I think UCAD, UChef, sorry, is going to be wonderful. I think it's going to be a good buy. That we've got structure. We've got like a little stop point going on and then a retest. So the fact that didn't on the first retest jump up a bit more, yeah, you might want to get an entry around here where the trend hits the support. All right, that would be where I'd be looking. Scanner calls an entry. Can you explain the table? Yeah, sure. Absolutely. In this table. So this table is like a checklist. So when I print this off, I've just made this on my own. Feel free to change it, alter it, you know, make it look different. But this just keeps me in line with the strategy. So when you go, so Chloe, obviously you've got some videos. You've got quite a few videos to get through where I explain the strategy. This is basically the strategy on a bit of paper. So we only trade when we've got all of these confirmations. And I'll explain that very briefly. So imagine you've got no experience in the market. The price does one of two things: it goes up or down. So with no training, you could win a trade just a 50-50 chance. Obviously, you could lose. The reason why we layer a strategy on top is to make it a more probable trade that goes in our direction. So when we haven't got a strategy, we're kind of gambling. Well, we are gambling. So the strategy just makes us a bit more smarter. You know, we understand how the market moves, different levels. You know, these levels are where banks tend to enter the market, and we want to be with the bank, not against them. Which is what you'll go through the education. So yeah, that checklist, that table basically just keeps you on track. So if you get down to like stotch, you know, you're buying, is the red above, is the blue above red? No, you're not going to trade. So it just protects you from making mistakes, basically. But again, we can go through that over and over and over. We can change it for you, make it look, you know, different, so that whatever you need, we can accommodate. Any other questions? I'm going to look through the patterns whilst we're here. No problem. All right, this one's interesting. This one is interesting. Look, if we pan out, we've got a overall downtrend. So there's an awful lot of consolidation here. Can you see that? It's like almost like it's, you know, spike the low. And boom, right to the bottom of the zone. If this breaks this low and then retest this low, this is how you can kind of use the scanner for more trades. Don't want to confuse you. We shouldn't do this. But if this kind of comes down, breaks the low, back, then gives a scanner source entry, yeah, we could be very good. Very good. But I wouldn't have normally got in here. It's in consolidation. You want to be in the trend. Yeah, if you're in consolidation, you're in dangerous territory because they're wrestling for control. You want to kind of wait for it to break and then drop. They could drop down to knock out the low. So that could be a huge move that on Euro NZD. Moves fast too. That would be a lot of pips. Love the NZD. 191 pips. Woo. Alrighty. Alrighty. So Chloe and Ross. Ross couldn't make it tonight. He only joined back today. He's been with us before. We'll be doing a launch call where we'll go through the whole concept, absolutely everything together, get everything set up for you. And then everyone else, it's just about practicing, journaling, contacting me if you need any one-to-one help. But stick to the plan. Hour, drop down to the 15. If there's nothing here that's obviously with the trend, then just don't trade it. Just don't trade it. EJ was interesting mainly because the X to D was at the 127 or 128. See this line here? Now that's a reversal area. That's why I aim for the 127 when I aim for the third entry, because normally it will hit that and drop. And it might continue going up, but that's why you got that good down. But this, because it's an uptrend, that's probably the buy there. We've talked about this, reverse engineering it. A little look. But I'll leave you with this, and then yeah, look, 618 here. I know this might look messy. So it's pulled back to the 618. That could go on to give us a new higher high. So that is a pullback, not a continuation. Good move though. Want continuations with the trend. Okay, this one, Euro USD would have been downtrend, pullback. Nice. All right, guys. So if it's not there, don't trade. Wait for the one. Just wait for the right trade. It will come. There will always be an opportunity to trade. All right, that's our hour. So, guys, thanks for showing up. I hope you like the logo. I hope you like the posters. Again, I've put it in the group, but the intention is have that as your vision. You know, you are a pro trader. You've got to think it now. You've got to believe it now. And you know, from here on in, I want you to think about winning. Think about winning. Oh, Mum's on the call. Hello, Mum. Check this is good. Need to get up to speed. Yes, we'll get you there. We will get you there. Let's get it done. You got your posters. You got your vision. Yes, Bev. Bev's in. Yeah, let's work hard. Let's stay disciplined. Think about what times of the day you can trade. Stick to those only. All right, and let's master this skill. Let's get you funded. All righty. Let's get you funded. I'm going to play you out with. Ooh. Should we go for? Oh, this is a good one. Guys, feel free to jump off. I'm just waiting to. Well, guys, thanks again. I will see you all shortly. Thanks for showing up. Adios.
Whoa, shake. Yeah, we finna shake the bank. Turn her up cause she ranked. TP.